And now with the latest business and market news, it's over to Jane Edwards.
Thanks, Alan. It looks like we're set for a bleak day on our share market tomorrow after Wall Street gave away 1% on Friday, with investors fretting about the global impact of rising inflation in China. Chinese inflation is now running at 4.4%, almost 1% higher than last month. The news caused heavy losses on the Shanghai share market and prompted expectations that China will lift interest rates, putting a dampener on demand. As a result, there was a broad sell-off in the Northern Hemisphere on Friday in stocks, commodities, bonds and precious metals. In South Korea, the G20 closed its meeting with a fairly vague series of commitments to deal with imbalances in the world economy. While across in Europe, concerns about Irish debt weighed on markets as speculation mounted that Ireland will require an EU bailout. Over the week, there was little evidence of last week's buoyancy. All the major markets were sharply lower except Japan's. Now, with a local perspective, here's Marcus Padley.
Well, that was the worst week this financial year, but you might like to know the ASX 200 is now up 50% this century, which works out at a rather measly annual average compound return of just less than 4%. You would have been better off in cash. But spare a thought for the Americans, their market's down 17%, and the Japanese, theirs is down 47%. There was a bit going on this week, including the government upping their GDP forecast, but then what would they know? Quite a few banks went ex-dividend as well. The Aussie dollar hit a record high and gold hit a record high. You might remember the Reserve Bank in their wisdom in 1997 selling 167 tonnes of gold below $400 an ounce. It's now $1,400 an ounce. Otherwise, there was a lot of activity this week in the corporate department, capital raisings and bids as prices are high, and people doing their business before the window of opportunity closes running into Christmas. But the big story this week, of course, was Royal Dutch Shell selling a 10% stake in Woodside. The PR machine was out in force, talking about a possible bid for Woodside, but you'd have to say, why then did they sell the stake at a 7% discount, and why didn't they ring a bidder and give him the stake? It may well just be Royal Dutch Shell was taking advantage of a high Aussie dollar. Otherwise, a couple of profit warnings this week from Adelaide Brighton and Program Maintenance Services. We saw Seek down after a trading update, Computershare down after their AGM, and Centrebet was down after announcing a strategic plan. Other stocks going down included Westfield, which came out of a trading halt post the announcement of their restructure. Qantas was down on its engine troubles, and Wesfarmers, Lendlease and Fairfax down after their AGMs. Otherwise, stocks going up included Warrnambool Cheese and Butter Factory after Bega took a 15% slice of the company. We also saw Australian Worldwide Exploration up after the announcement of potential gas discovery, and Seven Group and BlueScope Steel were up after their AGMs, and we saw Orica and Dulux Group make small gains after their results. Winners of the week this week were Brockman Resources and Ferrous, two iron ore companies that were bid for by the same Hong Kong investment holding company. And loser of the week was Program Maintenance Services, down 24% after their profits warning.